Hi, I'm Meredith, and this is my stock market presentation. My mutual fund company is called Meredith Mutual Company, and my slogan is Making More Possible. Here are the companies that I invested in. I invested in Uber, Moderna, Castle Biosciences, Alibaba, Carvana, PayPal, Zoom, UPS, Wayfair, Walgreens, Expedia, and Spotify. My overall best investment was Expedia, and I got a total profit of $2,005.15. Here's a line graph of that. And my overall reason for success with this company is that with the rollout of the vaccine gaining headway in February, Expedia stocks outperformed the market and rose 30%. I invested in this company right at the beginning of February because I actually traded for it. So that's right when these began to rise. And the reason for this is that investors are seeing an end to this pandemic with the lowering of case numbers and the rising of vaccinations. So what they're doing is they're taking their money out of e-commerce companies such as Wayfair, and they're reinvesting their money in travel companies and airlines such as Expedia. And especially going into spring break and summer, these are gaining popularity for sure. My worst investment was Wayfair, and I lost a total of $9,664, which is pretty bad. So here's a line graph of that. And like I said, the reason for this is that e-commerce is decreasing in popularity as we see an end to the pandemic, and investors are taking their money out of e-commerce companies and putting it back into airlines before they skyrocket. Here's a line graph of Moderna. They're a vaccine company, and so you can see that they're pretty up and down. But overall, they have supplied a lot of vaccine doses to the United States and around the world. This is PayPal, who also recently bought Venmo, and as you can see, it remains pretty constant, but right around Valentine's Day, we did see a pretty big spike, which is pretty obvious. This is UPS, which, as you can see, remains pretty constant, and this just represents how big companies such as UPS tend to remain pretty constant. I began with $300,000, and my final amount was $292,585.77, which means I lost a total of $7,414.23. So you can see a line graph of that over there. I'm pretty disappointed in this, but not the worst that could have happened. So here is a bar graph of every single company that I owned. And as you can see, there's not too many huge gaps, but there's just a visual representation of that. Here's my performance summary. Overall, I'm pretty disappointed in my performance as an investor. I went into this project not knowing one thing about the stock market, but I should have done more research before I began investing. My strength was that I made a profit off of the companies that I did my research on, but my weakness was that I blindly invested in a few companies and just hoped for the best. In the future, I will definitely do extensive research before I choose to invest my money in stocks. This means referring to multiple sources to gain information and learn about the economic patterns of one company. This experience has taught me that changes to the economy never occur unexpectedly because it's connected to and dependent on countless other factors, allowing economists and investors to predict the trends that the economy will follow in the future. Although I lost some money, I've definitely gained knowledge, and I'm glad that my first experience with the stock market did not involve my real money. That's all I have for my presentation. Thank you for watching.